Hey, Francisco, do you look at then today as like, okay, we just got overdone a little bit, so we're going to get a sell-off? Or is it something more material in that are the spot prices running much further ahead than where the reality is?
Hey, Alex, thanks for having me again. Well, look, I mean, I think, the piece came out on Wednesday. We had a run-up yesterday, so we had a sell-off today. I mean, so I don't think it's signaling much, but I think it depends on the commodity market you're looking at. Remember, industrial metals are facing severe supply constraints, particularly copper, and they're also facing enormous demand from China, but also from decarbonization efforts. We've talked about this in the show before. So now we're thinking copper has a pretty good chance of breaking through $10,000 a ton again. And remember, we are calling as an average price for the fourth quarter of $9,500 a ton. So we are quite constructive on the industrials front. Energy is a bit of a different story, and that's because, of course, we have a lot of spare capacity, and the run-up in prices has been somewhat linked to the OPEC extension cuts that we saw last week by Saudi Arabia, the million-barrel-a-day surprise, the New Year gift, as it was related to by the organization. So it depends on where you're looking at. But again, corn has also been seeing a big jump. Liquid natural gas in Asia traded at $195 a barrel of oil equivalent. There's a lot of things going on in the commodity space. Lumber spiked again. Iron ore is likely going to average $135 a ton. There's a broad range of issues going on here, and I think liquidity has a lot to do with this.
Francisco, what's the risk to your thesis? We've been reporting over the last hour, Europe is screwing up its vaccine distribution. The Commission now is facing delays from Pfizer, BioNTech. The rollout in the States is taking a while to get up and running. Very few countries around the world are doing this well. How big a risk is that to your outlook?
So again, it depends, right? I think when it comes to oil, we have a $60 target for June, and we're calling for Brent, and we have an average of around 50 for the year. So clearly, oil is a little ahead of our expectations. So we think a retracement will be natural here going into February. At the end of the day, with $195 LNG, oil naturally is going to be lifted up by energy demand globally. We're having a cold winter in Northeast Asia. But then the other commodities like copper and some of the industrial metals are facing a different story. There's a structural deficit that's going to be multi-year as we move on to decarbonize the electricity sector, but also driving. So we think copper could see maybe a modest pullback. The real risk is that to copper this year, in my mind, is that COVID outbreaks in China start to take off in a major way, because that's been the main source of demand. And our expectation is that Chinese demand stays strong and then broadens to Europe and the U.S. So if China falters, that's the big risk to our call, I'd say, on copper.
So that's the downside for copper. What's your bull case for copper? What could be the potential upside here?
Well, the potential upside is that the vaccines are effective, that within a couple months, we inoculate the highest risk groups. Because remember, we are not handing vaccines out to everybody, and we're handing them out to people over 75 and people over 65 now in the U.S., which are those that are most at risk. I know I'm not going to get a vaccine for a little bit here, and my children are probably not going to get a vaccine for months. But the risk is I think in terms of hospitalizations and death rates, it's really concentrated on those over 65. And I think there is going to be a lot of focus on getting that piece of the population vaccinated. And that could happen within 2-3 months. And by then, we'll see probably more of these COVID-19 restrictions lifted. Now, COVID is not going to go away completely, but I do think we could have a pretty good summer if we keep pushing in the right direction. And that's what the trends suggest, in my mind.
Francisco, what are the alternatives to copper if it gets too high? How much will we see people switching to aluminium and other metals? And at what point do you think that starts happening?
So for aluminum, we're still forecasting $19.50 a ton. We haven't changed our numbers. So we think prices are maybe a little ahead of where they should be. Aluminum is solid electricity, solid power. You're taking bauxite, turning into alumina, and then basically using 14 megawatt hours of electricity to turn it into aluminum, and essentially when you think of aluminum, there will be additional demand. Now it's a much bigger market; it's multiples of copper, so it can take on more consumption. And in the past, frankly, everyone that could shift to aluminum has been shifting to aluminum because it's much easier to make, and it's based on a commodity that's a lot more abundant. So I'm not sure there is a lot of substitution left, to your question. So that's why we are more constructive on copper, because we see limited mining constraints here. Chile and Peru, I think Chile this week sent workers home because of COVID risks at the mine. We saw a big lockdown in Peru that drove production down 40% over the course of May and June. So mining supply in the case of copper has been a big risk, not so much in the case of aluminum. There we continue to produce pretty good quantities of aluminum.